SoFi just released their latest quarterly figures, beats across the board, guidance was even raised. So yeah, another great quarter. Are we surprised? Probably not. Stock is up between 7 to 9% at the time of making this video. Of course, throughout the day, things can change. We've seen that in the past with SoFi specifically. Great quarter. Stock's reaction did not make any sense, but so far it does. So let's go over everything you need to know for this quarter and a couple of comments that were made during the earnings call. A very, very good earnings call. I think 2025 is going to be quite a good year for SoFi. So stay tuned for all of that in this video. The next one will of course be on PayPal. So stay tuned. Completely different story, right? One is a growth story. The other one is a profitable growth story, but more on that in the PayPal video. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. We really appreciate that. We're closing in on 90,000 subscribers. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And a special thanks for Finch for sponsoring this video. Limited time offer up until Thursday, 25% off. New members do get 2 weeks of Finch Pro for free. More on them in just a bit. So right now, SoFi is back into positive territory for the year, closing in on that $14.5 billion in a market cap. Now, as you know, I made a couple of predictions a couple of days ago for this quarter. So I expected new members to be around 810,000, Galileo revenue flat quarter over quarter around $100 million, adjusted revenue $780 million with adjusted EBITDA coming in at $208 million, and EPS to be 4 cents. Well, I'm happy to say that I was extremely close across the board. New members came in a little bit lower, but I was influenced by that report that came out, well, the job listings, and basically that said that we're at 11 plus million members. So yeah, we're probably at 11 plus million members right now, but remember Q1 already ended a month ago. Galileo flat quarter over quarter, adjusted revenue $771 million, so I was very, very close there. Adjusted EBITDA also quite close, $210 million compared to the $208 million that I had. I had EPS at 4 cents. EPS came in even better than that at 6 cents. So yeah, as you see here, record quarter. So record adjusted net revenue, record adjusted EBITDA, record fee-based revenue, member growth, product growth, and management raises 2025 guidance. So yet another insane quarter by SoFi. I hope people keep doubting them because, well, they'll keep crushing their hopes. Now, before continuing, if you are interested in reading the whole transcript, of course, that's already online here available on Finch. And if you really don't want to go through all of it, you can always generate an AI summary. It will give you the highlight numbers for the quarter, for guidance as well. And then they added a new feature, generate custom summaries. So if you have specific questions about specific topics, specific business segments for SoFi, you can ask it right here. It will look through the transcript and give you an answer. Amazing feature to have. The only problem here, I cannot show you this right now because my limit has already been surpassed. That's the problem with AI right now. You have to work with AI credits. And this, of course, is available on Finch. Again, the link in the description. Finch is a stock research platform for those that don't know. They also have something very, very specific, and that's the fact that they track company-specific metrics. So if we go here to segments and KPIs, and we actually want to look at the membership growth throughout the last couple of quarters, throughout the last couple of years. We can see that here in KPIs. Of course, you can look at all the other lending products, etc., adjusted gross profit, net interest income, revenue per segments, and all of that. And here we can see exactly that on the platform. Barely, well, an hour after the earnings report came out, you can track all of these metrics here on the platform. Of course, I'll show you a bit more information in just a bit, but all of that, of course, can be found here on Finch. You get a link down in the description and in the pinned comment, 25% off up until Thursday, and then we're back to the 15% off. And of course, new members will get 2 weeks of Finch Pro for free. And so what we're seeing for this quarter is this right here. Of course, amazing growth and performance from the financial services side. Tech platform is the one that is, well, slow, very, very slow. Lending has picked up a little bit, although Q1 is, well, a weakish quarter. Now, what do we get? We've got member growth that has increased 34% year over year and products growth of 35% year over year. If we look at adjusted net revenue, that has increased by 33% year over year, adjusted EBITDA of $210 million with a margin of 27%, so even better than the whole of 2024, and adjusted net income margin of 9% at the moment. If we look at the business right now, and this is extremely impressive, if we look at fee-based revenue, on an annualized basis, we're already at $1.2 billion. And look at the fee-based revenue mix. We're already at 41%. And then you have, of course, all the rest at 59%. But look at how fast this segment of the business is growing. That's very, very impressive. I mean, then continuing here on the margin side of things, adjusted EBITDA margin continues to improve. Of course, only 1%, but still every percent here is quite important, and they're still targeting an incremental EBITDA margins of 30%, around 30%, and reinvesting incremental revenue growth. As for the financial services side here, so 4x non-interest income year-over-year growth, 45% net interest income year-over-year growth. If you look at contribution margin and profit, $148 million in contribution profit and a contribution margin of 49%. A year ago, that was 25%, almost a doubling here. I mean, this segment is incredible. Of course, everybody wants to focus on the tech platform because that's the negative part of things. But I mean, the acceleration in growth for the financial services side and especially the loan platform business should not be overlooked. If we look at personal loans or capital markets activity, they executed $3.1 billion of personal home loan sales inclusive of the loan platform business, consistent execution above the fair value marks of loans held on the balance sheet over multiple periods, 106.2% here, personal loans fair market value. Switching to the lending segment, they've seen the adjusted revenue for that increase 27% year over year. Contribution margin for that segment is coming down. Of course, they said they have no issues switching all of it to the loan platform business. Now, will that happen? Yes or no? Remains to be seen, but it's still going to be a big, well, relatively big segment for them right now until things change quite drastically. And then the negative point here, of course, is the tech platform. To me, that's not a surprise that we're flat quarter over quarter because I predicted that. They've told us that 2025 is still going to be a year of, well, I'd say slow growth, but we should see an acceleration in 2026. And here as well, contribution margin has come down now at 30% and contribution profit is down as well, $1 million or so quarter over quarter or flat year over year. So again, yes, of course, we focused before a lot on Galileo and the tech platform because we were promised that this is a very, very important part of the business. This is something that should be growing quite rapidly in the future, but that has not delivered just yet. So, okay, this is disappointing. But again, now that we have the financial services segment that is growing extremely rapidly and it's becoming bigger and bigger by the quarter, why focus that much energy, negative energy on the tech platform? To me, just doesn't make any sense. I understand that there are questions, but again, asking the same question time and time again and getting the same answers, it doesn't really help us much, or me at least. Now, another bad thing here is that we lost 10 million accounts for the tech platform, so you lost here another big client. Now, they did say the following. SoFi continues to diversify its tech platform client base beyond financial services company. During the quarter, SoFi launched a first-of-its-kind co-branded debit card program with Wyndham Hotels and Resorts. The investment made in building this new capability will help the business win additional consumer brand clients. SoFi also recently signed a deal with Mercantil Banco, which offers personal and business banking services in Panama and will use our Cyberbank digital banking platform. They've talked about expanding outside of the United States, more specifically in Latin America. So here again, a sign of that happening. As for funding and net interest margin. So since acquiring a bank license in 2022, they've grown deposits to $27 billion, around 90% deposit funded, around 90% of deposits coming from durable direct deposit relationships. Stable funding base and attractive loan yields drive a strong net interest margin. As we've seen right here, we've gone from 5.4% to now just over 6% since 2022. And the shift towards more deposit funding reduced the funding expense by an estimated $515 million per year, or well over $500 million. And so moving on to guidance here. So their raised guidance, adjusted net revenue is now expected to increase around 24 to 27%, implied adjusted EBITDA margin of 27% instead of 26%, net income margin of around 9%, but net income is expected to be between $320 to $330 million, diluted earnings per share between 27 to 28 cents, previously that was 25 to 27 cents. They do still expect tech platform adjusted net revenue growth of low double digits to teens. Then as for Q2, they expect adjusted net revenue to increase between 31 and 35% year over year, net income to become between $60 to $70 million, and diluted earnings per share between 5 to 6 cents. And of course, member growth of at least 2.8 million or 28% from 2024 levels. I mean, if they can do 800,000 each and every quarter, that's 3.2 million members for the year. Do I think they can do 800,000 a quarter? I mean, if they could have done it in Q1, which is a shorter quarter because of that February month, what's to say they can't do this every single quarter? So again, here the bar is being set low, I would say, and they'll continue to beat it. Now, as for the earnings score, they said they turned down around $100 billion in loan applicants over the year, and this is a huge opportunity for them because, of course, they're now in their own credit box, right? Super quality applicants. Now, imagine what happens when they start to expand that credit box. Well, huge opportunity. Basically, the total addressable market is going to expand for them. SoFi wants to help improve your credit score, and if they can do that, well, they can attract more prime customers to SoFi in the future, which means that they will be able to make more money in the future. They've also not seen any slowdown since the tariff situation has started. They do expect level 1 options and crypto to be launched this year. Guidance, of course, does not include any impact from those businesses. Why would it? These businesses do not exist at the moment. As for the tech platform, the outlook remains unchanged. They do expect an acceleration in 2026. With regards to SoFi Plus, so among SoFi Plus subscribers who are completely new to SoFi, over 75% adopt at least a second product and over 40% adopt a third product within 30 days of enrollment. And of course, SoFi Plus, a subscription product, very, very good to have. And so all in all, another amazing quarter by Noto and the team. Nothing really much to add. Everything's going as planned. You might say, yeah, but the tech platform is weak. Of course, we can always focus on that one negative thing, but I'm not surprised that it's weak. That's the thing. My expectations were quite realistic. Maybe some others are not that realistic and they'll get disappointed each and every quarter. That's fine. I'm very happy with my position, very happy with the performance, so no complaints from me. Anyways, that's all I've got for you right now. I'll start working on the PayPal video. Of course, do check out Finch for 25% off, link in the description and in the pinned comment, and I'll see you all in the next one. Bye-bye.